Oh, good evening, ladies and gentlemen. Welcome back to Stocks to Buy Live Sunday. Heading into the holidays, lots going on here coming into December. Looking forward to some of the Canadian bank earnings. No, I did not go all in on Misty for crying out loud, but we will talk a little bit about Bitcoin because I think it's where the true level of insanity lives when it comes to making unbelievably massive bets in the market. Now that we don't get the stories of Michael Burry after closing his fund, we got to turn to crypto where things get real crazy. But we'll also talk about retirement dividends. The path forward here is the markets have been semi-correctional depending on where you're looking. And, I have a hard time believing the discounts are going to persist, but you never know. You never know. Because this market is still pretty bullish coming out of those earnings. So any more it goes down, the more I will be I'll be happy. Nothing better than earnings going up and stock prices coming down. Bam. Yes, we are live. Firstly, kicking it off, yes, the fear and greed index, people are still crapping their pants. People still hyper concerned about everything, even though the numbers are still pointing to the moon and back. And you can argue the AI bubble all you want. Yes, there are some secular, probably not the right word, but there are some stocks that trade at wicked valuations in the AI plays. But the broader market, though pricey, earnings were good. We crushed it, right? And now we're starting to see kind of modest, flat pre-market here. NASDAQ up a half percentage point, S&P down, not doing all that much. Looks like people are just taking a bit of a breather here. My portfolio hasn't gone that far. Even after buying, I did do some reasonable buying over the last week and two. So the portfolio is generally down, but with some contributions, we're still kind of hovering around the same value points. So we'll see what happens here. I'm not too aggressive at this point. Still got like a really sizable decent chunk of cash, but I'm just going to either use it to pay down the mortgage next year, or if we do go into enough of a correction, I'll probably split it between the mortgage and the markets. Time will tell. And I'm also still making my bet on these recovery play stocks. I think this is a fun portfolio. Again, this is just hypothetical. I don't actually have any money in any of these stocks, but I just wanted to see if we took some of the mega caps that were trading down on the year and just bought them as a basket of, a dozen stocks here or so, just to see how they would pan out. We've got basically 10 stocks, reasonable 4% yield across the board. I'm sure you've seen these companies before. You've got like V&Q, real estate recovery if interest rates cut. TELUS is getting slaughtered. Canadian National Railway. Canadian Natural Resources is actually doing exceptionally well in this portfolio. Everything else is modest to flat. UNH isn't doing all that great for us, but for the most part, this portfolio has barely moved at all. We hypothetically put 100K in it. Portfolio hasn't moved hasn't moved an inch. But I think the next market defining movements are going to be held by Nvidia. Jensen, was going on about how basically Nvidia is the general responsibility for any direction the market's going in. All eyes are on Nvidia. And I think the administration, or obviously the political landscape, is well aware of this. And I think we're in this kind of short window right now where they're all investing in the United States. That's obviously the agenda right now. But I think the next wave and what would really send us into a new perpetual bull market is basically if Nvidia is allowed to sell to China, right? And that's been the real discussion that kind of keeps getting brought up, though nobody will attest to it. Anytime it's brought up, in a press conference at the White House or wherever, they just keep saying, hey, we're going to focus on the US first, but maybe on the older chips, which aren't really that far behind generationally, could be opened up to selling to China. Because I feel like China's market would be unbelievable for a company like Nvidia to breach, considering what they're able to do just mostly within the Western markets or the approved markets, I guess. Nvidia, though, again, I'm not going to base it off a value metric. It is trading, cheaper than it usually does. Once we get into the 40s, maybe not the worst place to be for a company if you believe in the growth trajectory we're going to continue to be on based on guidance. You never know, but again, not a stock I'm willing to play here. Regardless, it is an interesting defining factor to everything that's about to happen. Because if Nvidia goes, I promise you, everything is going to go with it, regardless of valuation. So all eyes will always be on Nvidia. Kyle, thoughts on CP Rail? We can take a look at some of the railways in a bit. I didn't buy Bitcoin at 80K. Did I miss out? So this is the real question. I'm not a Bitcoin guy. I'm not going to lie, but I do take great, satisfaction in reading people's trades, especially on Wall Street Bets, especially when it comes to the crypto side of things, because this is where you get like levels of degeneracy like never before seen in the market cycles. It's crazy because most people used to be just doing wild trades on penny stocks or high flying things like GameStop. Back in the day was like crazy to witness, but now like all the reality of insider trading and all the insanity that goes on in the market is in crypto because it's kind of semi-legal and what's considered security fraud. But the last big update, I think, was just not that long ago, but Bitcoin News had updated a whale. Basically, whale's 28.7 million profit highlights leverage issues in crypto. So there was a play not that long ago where somebody earned $28 million in cryptocurrency market experienced a significant downturn. This individual used 20x leverage to short Bitcoin. Now, I don't think this was the same one that we discussed with the insider trading around Trump's coin, but this was still a massive short bet that made a substantial amount of money. I mean, the guy made almost $30 million shorting Bitcoin. This was a massive deal. But then literally, not even like a couple weeks later, a BTC, a dormant whale, returned with a $31 million Bitcoin long after 18 months. So out of nowhere, basically a dormant wallet with 31 million in Bitcoin long, basically returns with a 31 million Bitcoin long after 18 months. A long silent wallet has suddenly came back to life, and it wasted no time. Diving straight into high leverage action. The trader has opened a 20x Bitcoin long, instantly pushing the account back into the spotlight. The position sits at 31 million, entered at 83,000, with Bitcoin now trading at around 84,000, giving the whale a floating profit of 127K. Now, this was from a couple days ago, and I want to remind you the Bitcoin price here, from when this was probably activated at 83, was probably right around here. You guys can see that there, like just right at this little area before we bottomed out. So I think the liquidation for this, what do they say? Again, this is all taken with a grain of salt. I've seen kind of, other articles talking about this that didn't correspond with other articles, but they're claiming that 78,900 would be the liquidation price. And damn, did we get close? I mean, it hit 80K, 8,700, but here we are, from that 83K mark being up 5%. So 20x leverage, guys. The multi-million dollar level of crypto betting can only be formed by people that were in this so damn early and made so much money that they just don't care to gamble it away at this point, because that's the only level of degeneracy I think could exist, is somebody that just did so god awfully well. They just have a different level of I don't give a crap. But somebody else pointed out, like, I think one of the most interesting discussions that's a bit far-fetched from today's reality is another major challenge of Bitcoin, other than being unable to determine fair value and holding being concentrated and it's solving no real problems, is that its encryption will eventually be broken. It's hard, sure, but when there's that much money on the line, someone will crack it one day. It's only a matter of time and technological advancement. So I've heard projections could take 20 years, 30 years, 40 years if quantum computing scales enough. But the reality is the hardware doesn't exist. It's kind of a fantasy, really, to break crypto at this point. Presuming Moore's law can continue and we make a new piece of technology, sure, it's not out of the realm of possibility. But at the current rate, I mean, a Bitcoin private key is 256-bit number, giving approximately 2 to the power of 256, or 1.15 times 10 to the 77 power. The estimated number of atoms in the observable universe is 10 to the power of 80. A number of similar magnitude. Even with the most powerful supercomputers attempting a guess, all possible combinations would take longer than the age of the universe, which is roughly 13.8 billion years. So they're like, even with quantum computing, the scale of those quantum computers, like, again, I don't think it's reasonably possible. Again, I'm not a super computer genius here, but on basic like mathematic terms, it's virtually impossible with any reality that exists today and any reality in the near term that we are aware of, at least to any degree. But outside of crypto, man, a lot of people have been making money in this market. Like, I can't get over some of the profitable trades going on with crypto, but on the Palantir front, I love following this story because I love Alex Karp. I think he's like one of the most angelic, like, just pump the stock to the moon kind of a guy. And this is what you want from a retail primarily held stock, right? But Alex Karp basically offloaded over 200 million in Palantir shares after Burry's bearish bet. AI bubble fears shaved 25% of the valuation. Now, I think this headline doesn't give enough justice because from my understanding, he did this for tax liability reasons. But I will point out, I think in the last couple of years, Alex Karp's unloaded like half his Palantir position or something like that, like over $1 billion worth of stock. I think today his Palantir position is still something like, is it 1.6 million shares? I'm not quite sure what he's holding left, but I know that he sold off a god-awful amount of shares, and he's still got like $1 billion worth of the stock, which is crazy. But I just love listening to his stuff because, like, God, man, like the level of degeneracy this guy is able to put into the market, I love it. I love it. It's just like, I can recognize that I'm a Finfluencer clown, but this guy is like a Pubco, like, just in the markets running like one of the largest companies in the United States. And he has just no problem, just barrel rolling, the people that hate Palantir.
You should build the best products. The products are going to have to be much better than any other products in the world, or they're not going to get implemented. I mean, all these things we've been saying for 20 years, and you know what? They pissed off a lot of people in the league. You know who they didn't piss off? The same people we're also making AI work for. The truck drivers, the plumbers. I run into people all over America and quite frankly, all over the world. People who have like normal means who are now rich because of Palantir. You know who's not rich because of Palantir? The people who read the analyst notes and the people who wrote them. And you know what? They're also still kind of angry because while they're cruising along in their broken down car, the person cruising next to them in their beautiful Tesla is an actual worker in this providing actual value who may have gotten rich on Palantir. By the way, I love that. It is nothing makes me happier than looking in my mind's eye at the bank executive who's hanging out with their thing, who's living on the drip of some high interest loan, watching some person who's free, American, riding their car, who did not go to an elite school, but knew enough because they didn't probably go to elite school to buy Palantir.
America, F yeah. The losers that drive the tractor trailers bought Palantir stock. F yeah. The hedgies making money off your money are jealous of you. I just love the tangents this guy goes on. It's just America, the low and the weak that invested in the retail strong Palantir took us to the moon, made me a billionaire. How dare you? How dare you short America? America first. So this guy resembles to me. I love the pumping though. You got to admit it's nothing short of incredible. I mean, the guy literally, I mean, anyone that foresaw Palantir back here, I have to congratulate. I'm not trying to shit on any of these people by any means. They have done exceptionally well. It's been one of the greatest growth stories next to Tesla back in 2019. It has to be, right? Again, but that doesn't change the metrics today of it being extremely overvalued. Does Alex Karp really need to be a billionaire in cash? Probably not. Could have held the stock, but hey, why not? Why not sell half the shares? Throw a bill or two in the bank, and then we'll see where it goes from there while we continue to pump the shit out of the stock, right? I just think it's funny, and I get it. It's a retail story, so it's going to be neat to see how this pans out over time. I imagine Michael Burry closed his shorts because there's no way you're holding through on a company like this. From a valuation standpoint, again, guys, I don't know the future of this company. The software could be absolutely astounding and continue to pump the stock. If Alex Karp is right, and we don't go into any kind of recessionary event, it's going to be really neat to see how the future unfolds for a company like this. If it can hold these highs, and continue to propel. Again, we're talking about pulling valuations. If the stock keeps going down, this could actually be a reasonable buy. If I had to guess at this growth rate, if it keeps up, I'd be more comfortable in the 200 price to earnings multiple. The 3 and 400s is just ludicrous, though. I mean, you still got to wait 4 or 5 years just to get to fair valuation marks at this growth level. So if you can wait, 3 to 5 years, and you pray to God the market stays intact, that you could start making some substantial gains. But again, it's not in my wheelhouse. Regardless, I still think it's going to be one of the AI darlings. This stock, if the AI bubble doesn't burst, this is going to become this story will go beyond Tesla. If this software continues to scale at the rate it's scaling, if this holds true and the competition doesn't come into play, it could be absolutely wild. I buy MSTR because I believe on Bitcoin, so may as well get it 3x. Yeah, I don't have the cojones for that. I don't like people. Again, I grew up in a very traditional mindset of investing, no leverage. I used leverage once, and it was just my line of credit for goofy, fairly reasonable trades back in the pandemic. But regardless, I think if you want to go Bitcoin, I always come back to the same conclusion, which is you have to do it the appropriate way as an asset class, which means not holding it in your Wealthsimple account, not letting some third party manage the custodial access to it. The whole aspect of it is the decentralized asset, right? It's like holding gold that you can put in your closet and lock up somewhere. That's the idea of it, right? So the only way to actually truly accept the asset for what it is, you kind of have to just get a wallet and just hold it outside of institutions. I mean, that's the value. That's the purpose. That's not how people trade it today, obviously. But as we're going to see with some hedge funds later in some videos I'm going to post, you'll see how many people are, trading around crypto right now. There's major hedge funds selling crypto, which doesn't make sense. They're buying all the hype stocks, selling all the ones that are coming down. Instead of buying it, they do the exact opposite. It's kind of peculiar. Great video. Considering your opinion on Wealthsimple, did you buy Power Corporation? No, I keep an eye on Power Corporation. I do hold it through my VDY ETF. And if it continues to scale from here, obviously I'll continue to get larger and larger exposure to it. Power Corporation is an interesting company. I wish Wealthsimple traded purely on its own, because it is a fairly small chunk of the overall value. Like Power Corporation is trading at like a $40 billion value. And we just take a look based on their last earnings. They're claiming that the fair value increased 47%, Q over Q here, with Power Group of companies going from like 2.7 billion to 3.9 billion. Wealthsimple is still like a fairly small portion of the overall value of Power Corporation. Like, this is a behemoth of insurance players out there. It's a massive wealth management company. It does a lot. But Wealthsimple on its own, if this was a publicly traded company, privately it's growing like crazy, and they have no problem raising capital. They just did another capital round that I think gave them a value at like 10 billion or something like that. But my God, if Wealthsimple could be like Robinhood and just purely publicly traded, it would probably be worth a lot more than 10 billion right now based off the growth rates. Regardless, it is a neat stock to follow. Kyle, what do you think about TAC, the other side of AI? Yeah, so isn't that, I know there's some people playing that. I'm pretty sure that is TransAlta, yeah. I think Chris Camillo from Dumb Money is playing this stock. A lot of people are looking at like the coolants and the power and the companies that are able to build out a lot of these AI data plants, because this company is an electricity power generator and wholesale marketing company headquartered in Calgary. I haven't looked too much in the bull thesis behind it. Has traded down quite a bit off its highs in this correctional period. So, if you see it as an opportunity for AI, go for it. I'm still hyper bullish on the utility space. I think the best thing you can possibly do right now, and I remember Scotiabank was offering GIC linked, they were like guaranteed investment certificates that were linked to the utility sector. What's the utility ETF? Is it XIU? I love keeping my eye on it. No, that's the TSNX 60. What is the utility ETF for the US? Give me a utility ETF. XLU, that's the one. Yeah, I don't think there's a better place to get stability in one's portfolio. It is outpacing the S&P 500 this year quite nicely, just because of the dividends that it offers. And we'll take a look to see what the yield is. I constantly contemplate on adding this to my portfolio. I did own it briefly once. I should have kept it. And I'm debating on whether I should be buying back into it, because utilities are typically like the most underexposed aspect of anyone's portfolio. Hands down. Like it's probably one of the, we'll take a look and I'll show you how small of a sector it is. But this is NextEra Energy, Constellation Energy, Southern Company, Duke Energy. Like, I would own a lot of these on an individual basis right now. I think they're great companies. The ETF since inception has only done around 8%. The last 10 years has annualized around 10%. But in the last year to date is again 20% with the dividend. And I think we're going to start seeing exceptional returns depending. There's some variables to this, but let's just take a look at let's just give me an idea here. What's the dividend yield? 2.39%. Okay, so 2.39% holdings and weightings are subject to change. Very low expense ratio, 0.08%. What's the dividend yield on this guy? Did I skip over it? Yeah, the ex-dividend is 2.6%. So we're not talking about huge dividend yields here, but still much higher than the S&P 500. But VOO right now, how much do we get of utilities in this guy? Let's just take a quick look here. Yeah, it's literally like one of the most stable sectors, and I think it's better to own than real estate. But if we take a look, utilities are 2.3% of the S&P 500 right now. And on the Canadian markets, let's just see how big utilities are. Yeah, I think it's a great sector. To be fair, maybe I should start throwing some money at it here at some point. I feel like I'm going to regret not doing it, because the sector is going to start to outperform. What are we looking at here? So yeah, on the Canadian side, it's only 4.28%. So it's definitely one of the most underexposed sectors. Probably every investor has, in their portfolio, if you're just buying broad-based ETFs. Crazy to consider, really. Aside from Meta, is there any other stocks that you are eyeing? Yeah, we'll talk about them in a moment. I want to answer a few more questions, and then we can talk about some of the stocks that I'd keep an eye on. And again, utilities, I think, are a great place to start right now. I'm a boring investor, man. Like, I love the idea of stability. If you want to gamble a bit, I do like small caps here and there. Some of them are coming on some pretty good discounts, but regardless, the vast majority of my my money because I consider them like army veterans. Like they've already been out in the world. I had to work my ass off to get them. And if I'm going to deploy them out in there and they're going to come out of retirement and go back into the working force, you got to make sure they're going toward things that have the highest likelihood on the path of least resistance to growth. In my opinion, anyways, for the bulk of one's portfolio. Hi, can you make a video for people in their 60s and investment decisions? So this is a complicated topic of choice. Very complicated topic. I'm finding myself having harder and harder times telling people how to invest toward retirement because I don't know what your goals are. And to be fair, I'm somebody in retirement that can be very happy holding the kind of portfolio I have now. Like I just want exposure to the best possible companies out there. I'm not that dividend oriented, but if I was, and again, you find security in a sense of dividends. I've been constantly iterating 3 ETFs this year that I'm becoming a big fan of. ZDI is a great global market ETF. Very diversified. The yield's around 3% after the expense ratio. Offered pretty good returns as of recently. In the past, it hasn't because, again, like the other markets just haven't done as well up till recently. But I do like this ETF for global diversity. And you can pair it with things like XEI, a great diverse ETF. Again, you're sacrificing growth for this level of diversity. But again, we're focused on income and stability, right? That's what most people in retirement want because they don't want to see their portfolios drop by 30 or 40% when they're freaking out, not knowing what to do. You know, if you want to pair it with some safer investments, ZDI, XEI, and I think DGRO is a great US dividend ETF right now. Because the point is I still want you to get exposure to some of those great companies, but I know a lot of people want to get dividends and get exposure to those great companies. So you could do it through some of the option ETFs, as mentioned, things like Devo. I still like. I like this ETF because it's probably one of the better performing dividend ETFs that does give you exposure to things like Johnson & Johnson, Apple, ExxonMobil, JP Morgan, AbbVie, Microsoft. So you're still getting some technology mix in here. It's very diverse between financials, healthcare, and information and technology. I think the goal in retirement is if you're looking for pure stability, if you don't have like an ungodly amount of money where you just don't care if it drops by 40%, based on market risk, and you just really want income and diversity, you want to make sure you're getting proper sector exposure. And these ETFs do such a great job at ensuring like you're getting a broader base of sectors while still getting exposed to some of these great companies. Now, again, you're going to sacrifice a little bit of yield, but you want to make sure you're still growing your portfolio over the long run. So keep your mind on that. But I'll post some videos soon, and we'll talk more about retirement portfolios. I love the sell-off. Bought some Google, Meta, and Microsoft, waiting to see if Microsoft will go to 450 or lower, and then buy more. Not much on sale on the Canadian stocks. I think there's some good sales in the Canadian stocks. I think, again, banks, we'll see how earnings come. If earnings turn out to be good in this next earnings cycle coming up in the next couple of weeks, in the next week and a half, I think it'll be a defining factor that we are in a new, a literal brand new bull market for the Canadian banks, and their values will probably be justified here, which is why I don't mind to keep buying VDY. If it doesn't get proved and, loan losses maintain and they start going back up or flatline or something and earnings don't keep growing at like 20% clips, then yeah, I mean, there's going to be some concerns. The banks might correct a bit. I still think there's a lot of value out there. Canadian Natural Resources, the oil companies have started to rebound a little bit. They were trading at reasonable values. I mean, there's a lot of good stocks. It ebb and flows. There's always good companies out there that are ebb and flowing. And as mentioned, like Microsoft could start to become favorable here now, trading quite reasonably off its highs. I mean, it's down 12%, still trading at a 33 PE. It's nice if you can get it in the 20s. It's not often Microsoft goes into the 20 PE level, but these are the kind of stocks you want to put on your radar, right? Like I've said this time and time again, the mega cap companies, easiest place to make bank because they go through these ebb and flow cycles where some come in and out of favor all the time. I mean, we've seen it with Apple over and over. We've seen it with Google. We're seeing it with Meta. We've seen it with Meta multiple times. It's just a very safe bet for companies that make an ungodly amount of money, that have very diverse revenue streams. When markets go through hiccups, people will still sell these off because the market is a drama queen and they can misprice these stocks quite quickly. And right now, again, we're sitting in a correctional period where I think valuations are still a bit high, but we're much better than where we were, depending on the companies you're looking at. And even Nvidia has come down quite a little bit, considering the growth rate. It's still somehow, propelling. It's quite extreme, quite incredible. And again, this is why I'm going to always maintain to be in the market. And just think about like a year ago, remember, right after the tariff war, it was the end of Canada. It still is the end of Canada. I mean, if you listen to the real estate side of things, it's just fear monger, fear monger, fear monger. When you're fear mongering, that's typically the market you want to trade in. Right now, I think is the most opportune time to buy Canadian real estate ever. Interest rates have come down. People are still seeing a lot of inventory out there. There's been a lot of good sales I've seen go on. I've seen great condos in great areas sell for like $500,000 for people that just wanted to get rid of them, people that are probably struggling. I don't know. Doesn't mean the economy is going to collapse. Probably not, because again, real estate can falter, but precious metals, uranium, I mean, that's the livelihood of this entire country at this point. So, I mean, it's ebb and flow. Don't get too crazy with the concerning rhetoric, and just realize anytime there's a lot of concern, it's the best buying opportunity you're going to get. And sitting in a market where there's extreme fear, again, that could be a window of opportunity. If you're a crypto investor, like some of these crazy guys out there, probably not the worst place to start accumulating a bit, though these down cycles tend to last a little bit longer. It's what a lot of people are saying right now. If you're basing it on like technical analysis, especially with crypto, that once we go into these bear markets, they tend to last a lot longer than just a couple weeks. But I don't know, man. I really don't know what to do here other than just keep buying the assets you like. Google making me happy. Yeah, it's making me less happy now. I mean, it's up a lot. I get it. I'm going long the rest of the shares for sure. But the real fun comes when the entire world is telling you you're wrong, and you're telling everyone you should be buying it, and you're buying it, and then it works out and you're like, I told you so. We don't get too many good trades a year, do we? I'm not a genius. Like I said, I wasn't smart enough for Palantir or crypto, but I can still recognize some opportunities out in the market. I think Google's the best performing mega cap so far still this year. Let's take a look at the S&P 500 heat map for the week. I mean, I can't get over how well Google actually did. And the fact that Warren Buffett picked it up just shows that I'm on the right path. We're paying attention. We understand, what mega investors understand. Yeah, I mean, Google's still up 58% this year. Nvidia is only up 33%. I mean, some of the chip makers out there are doing much better than that. Obviously, Palantir's done very well this year. Even Johnson & Johnson's up 40%, which is quite impressive. But yeah, Google's definitely an outlier this year. So we pat ourselves on the back for that one, gentlemen. Vancouver is a dump, and it's getting worse. Oh no, young people, 20s, are leaving like crazy. If I was in my 20s, I'd get the hell out of Canada. The writing is on the wall. You sound like so many people I've talked to. I love it here, man. I don't know about you, but like, I think you have to take a look at the areas you're living in, because I mean, I can show you a bunch of shitholes anywhere in the world. I don't think Vancouver's that much of a shithole. Toronto can be, depending on what areas you're in. But regardless, like when I walk out in the neighborhood I live in, life is good. My family's great. I like what's going on in my neighborhood. I don't ever see, drug abuse. I'm very happy with where I live. And that's what I keep telling people, right? Like if you turn the media off and you're doing good at your job and you just look around the world, is your life that bad? If it is, then yes, you need to change it. And if I was 20 years old, I don't think you need to leave Canada, but maybe relocate to a different province that has more growth. Because right now, Alberta is growing excessively because it's just been a more cheaper place to live. If we look at the general market housing prices in Canada, I think we've seen the biggest increase in Alberta because so many people fled Toronto and Vancouver, right? And personally, I would just get into the trades, man. If I was 20, didn't have anything tying me down, I would just immediately go to Alberta. I would start, getting into a trade, live with a bunch of guys for a couple of years while I just work my ass off, save up a bunch of cash, go buy a reasonable, affordable place and get your life started, right? So the average sold price across Canada has increased 2.1% month over month, still down about 1% over the 12 month. We're in a weird market right now, but if you do take a look at Alberta here, can we see the actual price increase? Yeah. So really interesting now. So over the 12 month, over the 1 year, so the prices have corrected a little bit, down 4.3%. But basically a month over month, they're up 3.9%. So that's kind of insane. It's crazy the volatility that's going on in Alberta. Let's see what's going on in Ontario here. Ontario has seen a 5% correction over the last 12 months, but is only up 5% in the last month. So yeah, you can kind of see that Alberta is where a lot of the action's going on right now, and basically everywhere else. Like Saskatchewan is up 4% year over year, month over month flat. Manitoba's basically flat. Quebec's seeing a big pump right now. A lot of people moving to Quebec year over year, up 8%. What's going on in Halifax? Can we highlight that? Yeah, Halifax is crushing it right now. They're up 4.6%. Vancouver's doing pretty good still. I mean, it's up 1.4% year over year, last month 3.2%. But you can really see the affordable areas is where everybody's moving to. And to be fair, I think that's better. I think it's better for the economy for things to level off, because what that's going to do is it's going to stagnate the prices in the major cities, offer some cushioning for people that want to get into these areas, but also bring up a lot of industry in Alberta and all these other provinces in the country, right? It's probably better, right? But again, like, to each their own. I don't think Canada is that bad of a place to live. I mean, we have so many rights here, and it's like the easiest place in the world to get rich. It's really interesting to me. If people understood like the laws in this country, especially for like taxation and global income and digital, like selling digital products around the world. I just can't get over how low Canada taxes on that. Not saying a crash, just stagnation. Yeah. Real estate will have a downward pressure over the next few years. Clamping down massively on immigration and student visas will be the main cause, in my opinion. Hope that's the case. Yeah, I mean, we all hope, right, if you want to make real estate more affordable, but I keep iterating that people have to come to the realization 1 in 3 people in Canada, almost 1 in 3 people here own their home outright. So 30% of the entire real estate market in this country is stabilized by people that have no mortgage. And then you got to look at the other little bits there, and there's a lot of confusion because, again, you got to remember people were already saying that on the mortgage renewals that like half of all mortgage renewals come into effect between like 2025 and 2026, and we're in the midst of that right now, and it hasn't been that bad. I mean, again, there are secular areas that I'm seeing where there's big deals opening up, and we're seeing a lot of inventory hit the market, and that is the buying opportunity you want to take advantage of. But the reality is like, it's not getting hit nearly as hard as I think people were hoping it would be. And again, it's very dependent on your area. Real estate isn't a broad stroke thing. Like you can't just say because immigration isn't going up anymore, real estate is going to collapse. It's like, well, we still have inventory slumps, like supply and demand mess ups, right? So right now we just need to shake out the loose money, the people that can't afford it. That'll allow some newer people to come in at better prices, but eventually we'll reach parity again. Come 2026, 2027, they're going to open up the floodgates again, I'm sure, and we're going to get massive immigration dumps. Kyle, did you have any nieces or nephews? I have 7 and none of them have moved out. Well, yeah, I mean, I'm going to iterate this again, right? Like a lot of people are staying at home longer, and depending on the culture you live in, that is more normal in other countries than it is this country. I don't think there's anything wrong with living at home longer, so long as you're using it as a fruitful method to bring yourself ahead in life. Because unfortunately, we talked about this a lot recently with some people I work with, just about how you have to be a part of the investing class. If you don't find a way into the investing class through stocks early on, you're never probably going to be able to afford a house. Like you can't just go and work a 9-to-5 job at McDonald's and afford a house. Like we're done with like the crazy initial industrial revolution that first happened like friggin' 60 years ago that allowed people to just go out and get a normal job, have a stay-at-home wife, buy a car and a house. Like those days are behind us. We definitely live in a new era, but you have to recognize that this is a trend that continues, right? Like, I mean, they're going to print money in perpetuity. And I mean, think about what a house cost 50 years ago versus what a house costs today, and imagine what it's going to cost another 50 years from now. Like, this is the reality of compound. Like, I always feel like market valuation really goes up, and valuation in general, on the printing of capital. And inflation is something that's baked into the economy at 2%, right? So assets should naturally increase, just naturally, based on the inflation that goes on naturally within the capitalistic system. So you have to find a way to counteract it, because unfortunately the job environment is getting very competitive. It's very likely that sometime in the near term, and when I mean near term, I probably mean the next 10 or 20 years, there's going to be some form of UBI, right? Like universal basic income, because capitalism will not function in the level of efficiency we're likely heading toward. And it's called the age of abundance, right? Like the world we know it is today and the whole way capitalism works. Again, you go back to any era, right? Like go back to Egypt, Rome, all these great cultures, they don't last. Like the way of life always is evolving and changing. So like, your kids are definitely going to be living in a world that we can't even imagine right now. And capitalism might not look the way it looks today. So, I don't think there's anything wrong with letting your kids live at home so long as like it gives them an edge up. But again, if you can't live at home, you got to be scrappy. No one's just going to hand you fucking free lunch. Like, I don't know. I had to grind my ass off to get to the level I'm at now. Like, I don't think, even though I lived at home with my parents, I still don't think people appreciate the level of shit that I had to do, where all my friends pissed it away. Like, all of my friends played video games, smoked pot, didn't care. I was working on the weekends. I was doing stock market stuff during the week, being a full-time magician. Like, I was grinding it. I was never really home all that much. And I say the same thing, like, it's not like it was free living. Like, obviously I helped out here and there and did stuff for my parents to make up hopefully for some of the difference. But regardless, like, again, if I had to start over, if I had to start dead over, swear to God, I would just move to Alberta. Again, no ties, right? When you're 20, who gives a shit? No one cares. You're out, you're aloof, you're just living your life. Go to Alberta, man, get into a trade. You can fast track, your independence so much quicker. Go rent a room with a bunch of guys, try and find a really cheap rent. You're never home anyways. Just keep grinding it. You have the energy to. Problem is when you get into your 30s, it becomes very hard. Because when you get into your 30s, things change a lot, right? Like your energy starts to deplete a bit. You got to start paying attention to your health. I mean, you got family. If you don't have kids already, you could have a significant other. I mean, your living standard, like there's so many things that come into play. So I'm saying, like, it also sucks dating in your 30s. I joke with my friends about this all the time, because when I met my fiance, I mean, we were both broke. We were both living with our parents. We were going to Costco for $1.50 hot dog and drink. And we were fine with that. Like there was no like there was none of this predetermined stuff that mattered, right? Now in your 30s, any date you go on, it's like, oh, you're living with your parents. Oh, you don't have enough money for a deposit on a house. Oh, you're like, would you have a job? Is it a good job? Is it a reliable job? All of a sudden, all this shit matters. And it just becomes ever more complicated. So it's very important that you have time to mess around in your 20s, but you really need to not screw up. Those are such crucial years. And your 30s are your last chance to like really get your shit together. And then by the time you're 40, if you don't have it together, that's your last decade of hope. Like 40 to 50, man, you get it figured out in that moment. Like you could pull it off, but it gets tighter and tighter the older you get, unless you want to work until you die, which, let's be fair, that's not necessarily a bad thing either. Because a lot of people don't retire in retirement. There's nothing wrong with finding a balance of income and work that you enjoy to keep you going, keep you alive, keep you young. If you can find that balance, great. But I really think you got to figure your shit out in your 20s if you want to have a good life. Your 20s are very crucial. Facts, I'm in my 40s and only started thinking about life after work. When I think about all the money I pissed away, yeah, I think the big wake-up call for me, and I think what most people end up going through, is the realization that you're spending a lot more money than you think you're spending. I think that's like how you convince the younger generation to realize what they're actually spending money on, because, you know, that compound calculator, I know it's boring as hell, but it is the fact of my entire existence. Like early on when somebody showed me this and said, hey, Kyle, you can retire in 15 years, but you're going to have to put 50% of your income away. No one said it was going to be easy, but if you put 50% of your income away for the next 15 years, it's very likely you're going to have enough money to retire. And I was like, no way. I'm like, that could be doable. I could be frugal. I have nothing tying me down. I was 23 years old, right? But again, like a Starbucks coffee, right, is what? If you're dumb enough to spend $5 on coffee a day, like that's $1,825 a year. If you were getting for the last 15 years, the market average rate of return over, let's just say a 25-year period, and let's just say 15 years, because that's the only data we have. If you started 15 years ago, that would turn into $100,000. Not that that's going to continue, but let's say it went on for 30 years. I mean, that's almost $1 million. Like if we get the same market returns for the next 15 years, guys, you literally pissed away $1 million drinking a $5 coffee every day, right? And I mean, you can play around with the math however you want to play around with it. But the reality behind putting 50% of your income away, I've talked about this before. Like, let's say, again, we'll keep it really modest. Let's say you're making $60K a year. You're walking away with 50 of it. If you can bank $25K a year, live on 25, which is probably damn near impossible for a lot of people, and you're able to get, let's just say, a modest 12% rate of return, that's going to give you $1 million. And $1 million is enough to set you up. If you can't set yourself up on $1 million, you have a problem. But this is the math that I was told, and somebody really pointed me in the right direction and changed the entire trajectory of my life, in hopes that this video will help change the trajectory of yours. Can work in the trades easy? MTL have to pay mob to work in the trades. Yeah, I hear mixed stories. I hear people that do very successful in the trades, and then I hear people that still say it's a struggling industry, depending on where you're starting out. But the reality is if you grind through it, you have a business now that you can do on the side, right? Like you can work for a company, but you can also go and fix up people's homes. You can fix up your own home. You can value add to real estate. Like you have infinite level of value to the market. And I think that's like, my dad like is a guy like this, and I've watched the value like that he's been able to create, and like it's nothing short of incredible. I mean, if you can go look at a piece of real estate in a market like this, and you have the capital you've saved up, and you say, hey, there's a house here, it's a shithole, you know, it needs a lot of work. It's not too cheap, but hey, I could cut the expenses in half by doing the work myself, do a nice big value add to it, and then flip it. I mean, I've watched my dad add, you know, real estate to their retirement home. Like they built on a whole addition to the basement and a sunroom, added enough square footage at 50% market rate. I'm like, it is still possible, even in the premium market environment, if you're smart and you know people, man. Montreal hot women. What's better between moving to Alberta or Montreal, excluding the language factor? To be fair, I haven't been to Montreal or Quebec in a while. I have been to Alberta in the last couple of years. I like Alberta a lot. There's a lot of nice places up there. I think everyone that goes there is like, I could move here. We were this close to moving there. I'd already be retired if I moved there. Could have bought a penthouse for what I paid for this condo in Toronto. But again, in your 30s, things get a little bit more complicated than just the cost of living. Like, again, I'm willing to sacrifice some extra years here to spend time with my family. I don't think there's anything more valuable than family. So, you know, if I got to work a little bit more to pay this thing off and get a bit more money in the bank, who really cares? Every day I can go see my parents and my fiance's parents, and we can spend every day with our family. What more could you ask for? You know, it is life. What do you think about what else is going on? Public core. But Kyle, capitalism, you need jobs. Now, most of the junior jobs are automated or not available in IT industry. Yeah, I know, but there won't be any jobs. So you tell me how capitalism is supposed to function. I think it's an inevitable reality. A couple jobs, a couple industries, truck driving, a few industries are about to get wiped out, and it's going to be a lot quicker to that reality than I think people think. Stay away from the trades. I'm an electrician and you destroy your body. I'm 34 and already done. Yeah, I mean, that's another reality too, right? But if you can set yourself up off of it, I mean, there's so many good trade jobs out there. I mean, so look, my dad's in his 60s. Again, I don't know. I'm just going to say my dad is probably one of the most impressive people I've ever met. He does foundational work in homes. He's almost 70 years old, and the guy's jacking homes up, literally crawling under homes, apartment buildings, and cranking them off the ground and doing foundational work. Like, it's wild. I watched, man, that guy, he fell off when he was working on the addition onto the retirement home. He was climbing up on a ladder on the first story of the roof, and he fell off. And my mom thought they were gonna have to call an ambulance. And the guy got up after falling one story off a roof at almost 70, gets up, is fine. It's like, again, I don't know. Hard work comes in a bunch of ways. I know it destroys people's bodies, but then there's people like my dad that it just keeps them young. It keeps them alive. So I don't know what the balance is, but I have heard people complain, and I know it can be destructive on your body, but you have to be smart about it, right? Like, if you can find a way to make the money and add the value and do it while you're young, like I said, if you can figure out your apprenticeship and get it all done by 25, work till you're 35, bank a shit ton of money. I mean, you got a lot of opportunity. I've seen like a lot of electricians and landscapers that even do TikTok on the side and make a fortune doing like social media work. Like, there's so much innovation and so much capability that people just don't take advantage of. And I get it. Sometimes it can be hard. But I think if you just look for the opportunity, you can find it somewhere in this market environment. Sparkies ruin their body. Wild. Is liquidating my TFSA to buy a primary residence when I know I will have a high income in retirement due to the pension? Is it a good idea? I really don't want to slow the tax-free snowball. Yeah, this is a tough debate. It was something that we had to look deep into our souls to figure out. And I said the same thing. I don't know how old you are, but we completely liquidated our TFSAs to buy this property. But we did it knowing that when we bought this property 2 years ago when I was 31, and we said, look, like, it's going to take us anywhere from maybe three to 5 years roughly to hopefully pay the mortgage off and remax out our tax advantaged accounts. And we were trying to do those things in tandem. So I realized that if I can get my TFSAs maxed by the time I'm 35, which mine's almost maxed, and then we're going to focus on my fiance's, but if we can get those things maxed, we still have the next 20, 30 years if we don't tap into it to let it compound and grow. I don't want to give that up because it is so valuable, but you have to understand, like, if you want to liquidate it to really pay down a mortgage, then go for it. But you have to ask yourself, how quickly can I build it back? Because, if you're going to rely on that pension, that's all you have, you better make sure you can rely on it, because that TFSA just gives you so much freedom, liquidity, and optionality. Because let's say something bad happens, you hurt yourself, you're in an accident, and you're not in retirement yet, and you don't have a pension. Like, you just got to be aware of the risks, right? When you don't have access to liquidity all of a sudden. So figure out what the balance is for you. And if you want to liquidate it, go for it. Like I said, it's a tough debate. I don't want to give it up personally, but I would be willing to if you can fund it back in maybe a 5-year period and you still have a long road ahead of you to allow it to compound. Am I a clown for beating the market with HDIV? That is a covered call ETF. No, not at all. Actually, I don't think HDIV, to be fair, is the worst ETF. I think it does employ a little bit of leverage. And like I said, I think is HYLD the other good one? I think there's a few, like HMAX is pretty good. You're always going to underperform the underlying assets. So when the underlying do exceptionally well, typically, like, you're going to do pretty good regardless. And like I said, I have nothing against these ETFs. I just don't think, like, you shouldn't make these in your entire portfolio. I think it's a complete foolish thing to do. But hey, you want to mess around a little bit, you want to increase some income, I have nothing against these, and this one's done exceptionally well. And it's just writing covered calls against most of the Canadian markets. Great way for Canadian exposure. I think HYLD is the US version of it. And personally, I like both of these. I have nothing against them. I think they're better. They're the better of a lot of the option ETFs out there. HYLD has been doing, quite reasonably here. And it's just doing it against the United States. They both employ the same method of about 20.25 or 25% leverage. Again, the leverage could work to a disfavor, could work to a favor. Typically, leverage over the long run does tend to favor a portfolio better, and they're not doing it to an excessive rate. Again, you want to mess around a little bit. You're just taking risk on premium income. It's a different form of speculating, in my opinion, because it is market dependent, but I have nothing against it. Like I said, I know I shit on covered calls a lot, but I shit on how people implement them because there is an appropriate way to implement these things. And there are good ones out there. I don't have anything against HMAX, like the bank one, HYLD, HDIV or whatever. I mean, they can do well. So just make them an appropriate portion of your portfolio and just make sure you're not giving up on growth. Because trust me, like it seems foolish when, the pure financial ETFs like ZEB are up like over 10% more than the covered call versions. Like 10% is a lot. You put $1 million in there. I mean, you gave up $100,000. Yeah, you still made money, but I would still be pissed. Like that War Dog scene, a great War Dog scene where they undersell a contract and the guy loses his fucking mind after making like tens of millions of dollars. It's hilarious. That's how I feel because I want to make sure I'm maximizing my potential. You don't want to give up on the maximizing potential. Build your FHSA. I don't have that opportunity, but yeah, you could. I'm 23. This is more of a long-term thing. Hopefully buying a property in 5 years, but my income would likely not be high enough to quickly replenish my TFA. Yeah, but again, you're so young, right? So let's say if you can buy a house by the time you're 28, 29, and you can replenish it by the time you're 35, 40. It's not like you have to fully max it out either. Like, I think we put a lot of pressure on ourselves sometimes, but just to keep getting money in there and keeping the habits consistent, and, owning a house, like I think the most prevalent thing any single person can do to become a millionaire, it has never changed. It's always been the same. And I don't know why people try and argue it. It's have a paid off mortgage. None of this fucking, I'm going to get better returns from the market bullshit. No, having a quickly paid off mortgage and maxing your retirement accounts is the fastest way to becoming a millionaire. There's no other evidence anywhere else that says there's a better way of doing it. There's just not. That Dave Ramsey, you go to any study on all the fucking richest people in the world, and it really just comes down to that. Most people that are millionaires followed one very simple thing: max out the retirement accounts, pay the mortgage off early. Because, man, there's nothing worse than making a bank rich. I don't know how people are so comfortable with mortgages. It kills me inside knowing that over the last 2 years, the banks almost made like $20,000 of interest off of me. That's $20,000 that could have went to the mortgage, could have went somewhere else, but instead the bank made that. I don't know why people are so comfortable paying it. Yeah, could you make a little bit more in the market? Sure. But I don't want TD in my back pocket. And by the way, those banks have every right to call that loan whenever they want. That's another horrifying reality after 2008 that people just seem to have forgotten for some reason. If you have debt outstanding through a mortgage with a bank, at any point in time, they could come knocking on your door and within reason tell you, we want our money back and we're going to get it back. Either you're going to do it within a certain time frame, we're going to figure it out, or we're going to liquidate your house. It's like not paying your property taxes. Like, you don't really own your house when it comes to property taxes either, because, I think it's right now in Ontario, it's 2 years. If you do not pay your property taxes within 2 years, the government has the right to come in, foreclose on you and sell your house off. Like, it's wild. It's wild. Waste Connections. Hell yeah. I was thinking about this the other day. Waste Connections is a beautiful stock. I love this guy. I've been thinking about buying into these. Are they trading down? Like I said, I think my favorite industries are the most boring right now. Waste Connections. Let me just take a look here. Waste. Yeah, I really think it's WCN, for the love of God. Sorry, guys. I'm trying to pull this ticker up here real quick, and I'm having a hard time with it. So let me just pull it up here, because Waste Connections in the utility sector, I like, again, these are the sectors I love. And you're right. This is trading down a little bit. I don't know if these are worth buying right now. Actually, they might be a favorable little buying opportunity here. Waste Connections, Waste Management's another good one. I love the waste industry because of like how advanced recycling's getting. Yeah, man. I don't know. These are really fun industries to be involved in. If you want stability in your portfolio and reliability, it doesn't get more recession proof than these kind of companies, but I would love to buy into these in the utility space. You know what? maybe in time here, once I get my shit figured out, maybe we'll start adding to some utility sectors or some of these waste management sectors. Cause yeah, they're pretty incredible stabilizers. But again, tech is where a lot of growth has been, but you got to admit the reality of these companies have been nothing short of incredible. I mean, since what, 2015, yeah, I mean, waste management's up 300% in a decade. Like it's crushed it. It's done so well. It's done great. Hydro for defense, A+ choice in my opinion. Yeah, I agree. But on that note, folks, just bought TELUS. You're doing the TELUS play. We'll finish up with that. But yeah, I think TELUS is going to be one of the more interesting stocks to follow in the coming months and weeks, just because of like how many people are shitting on it. And we'll see on the next earnings if they can prove out the business model. I mean, the CEO did buy into it. Meanwhile, it's been getting a lot of downgradings, and it's below analyst expectations now, by the way. If you take a look, analysts, I think the lowest price target is 19, but the stock's trading at like 18 right now. Where's the analyst insight here? Yeah, look at that. The lowest price from any analyst is 19. The highest is 30. The average price is 23, and we're sitting at 18. Let that just put into perspective that even though people are bearish on it, we're below the bearish sentiment. Dollarama is heading to 200. Dollarama is another one I haven't looked at. Guys, stop getting me off track here. Jesus, I really want to go and relax. It's Sunday, man. We got to chill a bit too here. Chill a bit. Yeah, Dollarama is on fire. Dollarama has been something else. Look at that. Look at that growth. Yeah, I used to own Dollarama, and then I was a fool and I sold it. What a recession-proof company. My God. My God. Anyways, folks, stay cool. Stay awesome. It's been a pleasure as always, and I look forward to catching the next one. Peace.